Hi everyone, this is a technical analysis on the S&P 500. Let's start with some fundamental background first. Last week, the NFP missed expectations for a second time in a row, and the previous numbers were revised lower. This was seen as a disappointment as the labor market seems to be a touch weaker than previously expected. Nonetheless, the unemployment rate fell once again and lessened the disappointment from the miss in the payrolls number. The worst part for the Fed is that the average early earnings beat expectations, and such high wage growth is not consistent with a sustainable return to the 2% target. It's worth reminding, though, that the Fed will see another NFP report before the September meeting, so this NFP doesn't change much, but the data leading into the meeting can still weigh on sentiment. On the daily chart, we can see that the S&P 500 sold off from the 46.28 high and even broke below the red 21 moving average. This turns the bias more bearish as the moving averages have also crossed to the downside, but much will depend on what happens here at the 44.94 support. In fact, we should see the buyers stepping in here with a defined risk below the level to target again the high and eventually the breakout. The sellers, on the other hand, will want to see the price breaking lower to pile in even more aggressively and extend the fall into the trend line. On the 4-hour chart, we can see that the S&P 500 recently broke below a key short-term support around the 46, 45.60 level and then pulled back to retest it. The sellers lent on the level as they had confidence with the red 21 moving average and the 38.2% Fibonacci retracement level. If the buyers manage to get a rally all the way back to the level, we should expect the sellers to defend the level again, as a break higher would open the door for new highs. On the 1-hour chart, we can see that we have a divergence with the MACD right at the 44.94 support. This is generally a sign of weakening momentum, often followed by pullbacks or reversals. In this case, if the price breaks above the most recent week level at 45.18, where we had also the 38.2% Fibonacci retracement level and the 21 moving average, the buyers will have more control and are likely to take the price into the 45.60 resistance. The sellers, on the other hand, should pile in again here at this short-term resistance to target a break below the 44.94 support. This week, the main event will be the US CPI report on Thursday. The market has been loving the disinflationary trend seen in the past months, so an upside surprise is likely to weigh on risk sentiment and push the market lower. On the other hand, another miss in the data should provide some relief and lead to a rally. After the US CPI, we will also see the latest US jobless claims report, which is less likely to move the market since it's released at the same time of the CPI, but big surprises should have an effect nonetheless. Finally, we conclude the week with the University of Michigan Consumer Sentiment Report on Friday, where the market is likely to focus more on the inflation expectations figures.